Let's learn about trends. Market always tends to move in a zigzag motion. They never move in a steady motion. These zigzag motion give rise to wave-like structure. We can take help of these wave structures to speculate if stock is moving in upward direction or downward direction, or whether it's moving sideways. Following are different types of trend: an uptrend, a downtrend, a sideways, or non-trending market, or a no trend. Let's go ahead. What is an uptrend? A stock is said to be moving upwards or is in uptrend if it has rising tops and rising bottoms. Thus it makes a rising wave-like structure. Take a book and draw a rising zigzag pattern. You will see that is how an uptrending market exactly looks like. An uptrend looks something like this. Market is said to be moving in an uptrend if it has a series of upward moving waves or upward moving patterns. It has rising tops, tops that are higher than the previous tops. At the same time, it has rising bottom or bottoms that are higher than the previous bottoms. An uptrend has a series of rising tops and rising bottoms. This is a real chart example of Lupin. It covers data from May 2014 to November 2014. In the early part of June, it started moving, surging upwards, took out its previous top, made a new top, came down, then went ahead to take out its previous top, thus giving us a new top and a new bottom. Similarly, went up, came down, and then took out its previous top, thus giving us new top and new bottom. It continued to go, made a new high, came down, and then went ahead to take out its own top to reach 1500, thus giving us new top and new bottom. Now compare these bottoms and you will see that each bottom is above its previous one. This one is above this bottom, this one is above this bottom is above its previous bottom. Similarly, each top is above its previous top. This is above this one above this one above this. Thus, an uptrend has a series of upward moving wave structure. Similarly, an exact opposite is a downtrend. Let's go ahead. Downtrend. A stock is said to be in downtrend or moving downwards if it has falling tops and falling bottoms. A stock in a downtrend keeps making new lows after retracement. It will make a new low, retrace back, cover some of its losses, go up, and finally it will cease going upward and start moving down, thus giving a new top and a new bottom, and went and go ahead to make a new low. Let's take a look at theoretical price structure. This is how an ideal downtrend should look like. Similar and opposite of uptrend is nature of downtrend. Series of downward sloping wave structure or price pattern is characteristics of downtrend. You can see it has a series of falling tops along with a series of falling bottoms. Let's go ahead, take an example of real chart example. This is Madras Cement chart for the year 2013. It covers data from March 2013 to September 2013. You can see this stock shows characteristics of downtrend where it has a series of falling tops along with a series of falling bottoms. Every time market goes lower, breaks its previous bottom, it surges up but fails to sustain its upward momentum, comes down, makes a new low, surges up, fails to break its previous top, comes down, makes a new low, surges up, fails to go any higher, and finally broke down to make a new low. So each low is below its previous low. Similarly, each high above it is below its previous high. You can see each recent high is below its previous high. So this is the characteristics of a downtrend, a series of lower highs along with a series of lower new lows. So what is a sideways market? A market that does not show characteristics of any trend can be categorized as a sideways moving market. A sideways moving market, a non-trending market, is price structure where no reliable pattern can be traced. The structure of the prices keep changing unreliably. As a result, it becomes difficult to identify any tradable pattern. Let's take a look at an example, a theoretical one first. Sideways moving market or no trend. A market or a stock price is said to be moving sideways if it has no trending pattern, that is, no upward moving wave pattern or downward moving wave pattern. A stock can be said to be in non-trending zone if there is no clearly identifiable wave structure. Take a look at the figure below. You can see there is a series of rising top with a series of rising bottom, but suddenly the series is broken and a new low is made, thus voiding the fact that this stock is in an uptrend. Then you have a couple of rising tops along with a couple of falling bottoms, suggesting the fact that it might be now in a new downtrend. But then a new top is made, voiding the idea that downtrend avoiding the idea of a downtrend, and then prices go ahead to make a new high. Thus, no reliable price structure can be identified out of this set of data. Thus, you can say no clear price structure can be identified. Let's go ahead and take a real chart example. This is chart of L&T Finance covering data from May 2014 to November 2014. You can see in May it surged higher, came down, went ahead to make a new high, thus suggesting that this stock might be in an uptrend. Then it came down, found support at its previous low, went up but failed to go ahead and make a new high. Rather, it came down and made a new low. Here it suggested that this stock might be in a downtrend. Went up, failed to take out its previous high, came down, took out its low, thus confirming the fact that this stock is in a downtrend. Surged up, came down, failed to make a new low, turned and made a new high. So your idea of a downtrend is now void. Now it suggests that it might have changed its direction towards up, but comes down, finds support, fails to make a new low, makes a higher low, goes up, fails to make a new high, and falls down, goes ahead to make a new low. Thus, no clear price structure can be identified out of this set of data, telling you that this stock has no clear trend or this stock has no clear tradable trend. As a result, it's better to avoid such charts. Remember, always trade in trending markets. As it is said, trend is your friend. Always look to trade trending markets. Avoid non-trending markets. Big money is often made in trending markets. Even if you go wrong on a couple of your trades in a trending market, one right trade will cover all your losses. One single trade will pay for all your losses. In a trending market, if you try to put your hand in a non-trending market, or since there is no reliable direction in a non-trending market, it's better avoid non-trending markets. People often get big heartburns in non-trending markets. As I have said earlier, technical analyst depends on reliable price patterns to take his trades. Trending patterns are reliable price patterns, whereas non-trending patterns are non-reliable price patterns. Hence, it is better to avoid low volume, non-trending pattern or non-trending market and look to trade in trending markets.